So I think it's really important for real estate to say, okay, you're buying this property today, but what's your goal? Like, is the goal that you're going to flip it 12 months from now, or the goal that you're going to hold it for 10 years? Because that starts you down such a different path from the tax perspective. So
hey, everybody. Welcome back to another episode of the Richer Geek Podcast. Today we have Anne Gannon. She's an entrepreneur at heart. She founded the Largo Group in 2016 because of her belief that the accounting needs to be done differently. Rather than an accounting firm with hands-off approach, she structured the Largo Group to take an active role with businesses. Man, do we need that, right? For all of you entrepreneurs out there. Over the past 10 years, she's worked with over 500 companies over the United States, ranging in revenues from 5 to 50 million. How you doing, Anne?
great. No, so happy to be here. Thank you so much for the opportunity.
Absolutely. And it's this is one of those special podcasts, everybody. It is New Year's Eve. It's early in the day, so we haven't had our champagne or our mimosas yet.
Yes.
Maybe the mimosas have hit. So I like to start out all of our podcasts. Give us, who is Anne? A little bit about your background. Why in the world did you get involved in accounting? And how did you make the leap from maybe regular CPA to concentrating on businesses? That's a lot in there, but
A lot. Yes.
give us who you are.
No, so I'm, entrepreneur at heart. I grew up playing actually competitive golf. That was sort of my first stream. I played,
Mm,
all through college. I played a year professionally, but I quickly realized I'm just more risk averse, and playing for money was just not
yeah.
something that I enjoyed doing. So, I kind of knew right away that I'm like, this isn't my passion. So I went back for accounting. My undergrad had been in economics, and one of my professors was just like, accounting really is all about the story the numbers are telling you. So if you get past how dry it is and how boring it is, like if you really can find it to be very interesting if you are curious. And that was probably some of the best advice that I was ever given. And so, finished my master's, went into public accounting, and then realized that my background was really different from most CPAs, that most CPAs had sort of, had internships and been around a bunch of accountants. And, I'd always been around a lot of entrepreneurs because golf,
Mm-hmm.
there's a lot of entrepreneurs that play golf and business owners. And so when I was in my first job, at a big firm, I understood the people behind the return more than my peers. And I think it bothered me that like you had the stack of returns, it was get them done as quickly as possible.
Mm-hmm.
Doesn't matter if they owe or not, like that's their problem. Like, just this mentality of like, oh, we're not here to help them. We're just here to do the
Mm-hmm.
return. And I'm like, this is horrible. Like this is not what I want to do. Right. Like that's just I came from, a different background, and these people
Yeah.
were real to me. I knew, yes, they don't know a lot about accounting, but they know what they want to do. They have dreams, and like we could actually help them. And
Mm-hmm.
when I started, it was also 2007, and so all of a sudden people were facing these horrible situations and nobody cared. So I probably lasted a couple years and then quickly realized that I just wanted to go out on my own. And my husband was like, "What are you doing? Like, why are you going to start your own business now?" And I'm like, I just know it can be done differently. Like, I know that there's a better way that could actually be a win for both sides, that it's more enjoyable for the people doing the work on the accounting side, and it's much more enjoyable for the business owner. And so that was really, it took me a few years to get the Largo Group going, and, sort of always this idea that we were serving the entrepreneur. And then COVID happened, and we overnight, because we had by that point really found a niche in restaurants. My background in golf was
Mm-hmm.
also hospitality, so I understood restaurants and hospitality. And so all of a sudden, probably 85% of our client base had a failed business on March 2020, right? Like they were closed, there was no hope, nobody knew it was going to happen. And I remember sitting there, and I escaped to Florida to visit my mom because I live in Philadelphia. And I was like, I can't just sit back and watch. Like my dad had a failed business. It had changed the trajectory of our family. Like it was, not a great
Mm-hmm.
financial picture for a long time because of that. And I'm like, I can't just sit on the sidelines. And so right away, I changed our entire model to weekly accounting because I was like, I can't wait a month to give these business owners, how they're doing. Like they need to know
Mm-hmm.
every week what's their break even point, what's their labor, like what do they need to do to stay cash flow neutral and not bleed, like stop the bleeding. And yeah, change the trajectory of our business because we gave, we still do, free online courses, educating people on accounting fundamentals. Because I think the biggest lesson of COVID for every business owner was you can't rely on your accountant, right? And I'm saying that as an accountant, like you can't be sitting there waiting for your accountant to give you your financials. Like you have to know your cash flow. You have to know enough to be able to make the real-time decision. Yes, your accountant has a role and, we can guide you, but like you fundamentally have to know your cash flow. You have to know your cash flow next week. And you have to know where you are every day so you can make those real-time decisions that everybody, had to start making during COVID. So, and then as a result of that, we've really gotten involved in real estate because the other biggest lesson of COVID was the people that owned the building, the people that owned real estate, they were naturally diversified, where the people that were just renting the space, even if they had a great concept or great business, you're beholden to the landlord. And if you own that building, you just could call your own shots in a way that the other people just couldn't. And so, we've, really gotten behind, educating owners on being diversified and making sure that you have equity and, these assets that really can get you through those really tough times. So, that's us.
Yeah. So, I haven't heard, you're the first firm so far that I've heard with weekly. Most of quarterly, maybe monthly. They sit down, and most of the CPAs don't even have that. There's just
No.
give me your box of stuff in December.
Yeah.
Maybe I'll
No.
get it done. If not, there's an extension. And then you find out whether you owe or you get a refund, and there's no warning. And that's when I decided to make. It's like, man, I thought I had a great CPA firm. And then all of a sudden they say, "Hey, Mike, you owe $45,000."
Oh, I know.
I'm like, "Where was that? And at what point did you know that in the year? And
Yeah.
what could we have done?" Well, your depreciations, blah blah blah, went
Yeah.
away. Your accelerated depreciations went away.
Right.
And I'm like, "Thanks for letting me know." I could have
Yeah.
spent some more money somewhere
Right.
that I
Right.
wanted, in order to not have the loss. But
Right.
so that's my little rant. So, ladies and gentlemen, yes, a great CPA or a firm. So, what would you actually call yourself? It's the Largo Group. So, what do you do? Are you a CPA plus advisory firm, or what are the different niches or segments that you do within the accounting?
Yeah, because I think a lot of times, sometimes it's just like an expectation gap that, if you're waiting till March to go sit down with your accountant, like
Mm-hmm.
they don't have time to
Mm-hmm.
really give you advice, and you're looking backwards, right? So even if they took the time to give you the advice, they're still looking at last year instead of this year.
Mm-hmm.
So what we try to do is, offer different relationships to different people, but one of them is, a quarterly tax strategy to where we're really
Yeah.
looking at current year in current year. And so that way, by November, December, we're able to just confirm like, all right, there's nothing else that needs to be done. We've done everything we can, before we get to March, where we're just going through last year's information to
Mm-hmm.
get the return done. So, I think a quarterly strategy is really beneficial. But in that strategy, we're also always looking beyond this year to,
Mm-hmm.
if you own real estate, what do we expect the appreciation to be on the property? What's your equity percentage? Are you looking to leverage that to buy another property next year? So really looking at, a 3 to 5 year plan by
Mm-hmm.
property. And so that way, really focusing on your overall net worth can be really beneficial, because so many times, I think even in the real estate space, people forget about the appreciation and they get so focused on the cash flow, which is important, and obviously we want it to be break even. But if it's not break even because you're paying down the principal, that still has a value depending on how much equity you have in that property. And so, really looking at a longer term, you could say, well, maybe, being a little below break even right now is okay because I'm growing this larger equity piece, in 5 years. So I think, again, that education piece is so important, that the owner has all of the information
Mm-hmm.
before, you just look at a tax return.
Yeah, it's amazing to me. as I've gone on and talked at seminars and done things in the real estate space, that how many business owners, people that own assets, had never heard of like cost segregations. And they've never, and
Yeah.
I'm like, oh, wow, it's like, okay, who's your CPA or who's your advisor? So talk
Yeah.
about some of the different things that, okay, uh, I'm the landlord. I've just bought, I'm in the hotel business. So I own
Right.
hotels. I buy a hotel and, or another asset. What are some of the things that immediately, when you sit down and say, okay, these are the things that we need to do to set you up properly before you actually maybe close on the loan or take over
Yes.
the asset? What are some of the things you can tell us about?
Yeah, and I think the thing is on the depreciation that a lot of the accounting side, so I would say, my peers in the CPA world, they're always hesitant to take a bonus depreciation because it lowers your cost basis, right? So ultimately, if you were to sell that property a year from now, you could pay more in tax
Mhm.
because of recapture and all those things. So they sort of you don't turn around and say, well, why do I owe $100,000 because I sold this property in 18 months? So I think it's really important for real estate to say, okay, you're buying this property today, but what's your goal? Like, is the goal that you're going to flip it 12 months from now or the goal that you're going to hold it for 10 years? Because that starts you down such a different path from the tax perspective. So, if you say, no, like, I really don't see that I'm going to sell this, for 4 or 5 or 10 years, then let's depreciate it, right? Because then the second big question is, are you going to buy another one next year? Like, is this one I'm going to 5 or is this one and then I'm stopping? Because that also, could make a difference. Because the thing to understand about depreciation, this is where I sort of get annoyed by the, Instagram versions or like the one size fits all is, in the IRS world, it's a pie, right? So you're going to either take it all now or as much as you can now, or you're going to spread it out over the life of the asset. So it's not like you're losing anything if you took less depreciation, right? Because you'll have more to take in future years. And it's not hurting you if you take more today, as long as you're aware that you have less to take in future years. So I've done this exercise with every one of our customers just to make sure that they understand, like, if we take bonus now, that's what next year looks like and the year after looks like, where versus not. So I think it's good just to really be honest with your CPA to make sure they understand, like, this is what I'm trying to do. And, and ask questions on those depreciation, because too many times people, again, when you're rushing and you give them the stuff on March 10th and it's due March 15th, they could just plug that number in the software and not ask you, right? They could just be like, straight line and go from there and just not have time for that conversation. So you as the owner being aware of, like, if you bought an asset this year, you want to make sure we've had that conversation with the preparer and we just are all on the same page with, what depreciation we're going to take. But I think, going back to your question of, when you first buy the asset, that's the big one. And I think the other one is, the cash out, like, how much cash are you going to be required to put in now? How are you financing that? What's your goal in that financing? Are you trying to pay it down and then, refi? Some of those are just good discussions to have at the beginning. So everyone's aware of, the cash flow and all of that. Because, like you said, if you go into that, it very quickly could start to generate money. So we want to make sure that we know, like, I expect it to make 20,000 or I expect it to make 200,000. Like, that's a big difference. So we want to also make sure that we have some sort of projection for the operating income sooner rather than later.
Curious about growing your wealth, you know the best opportunities aren't always the most obvious. That's why we've partnered with Bob Bernatas of Franchise with Bob. He specializes in helping investors like you leverage franchising, an overlooked but highly profitable way to create semi-passive income. And for a limited time, Bob is giving our listeners access to his course on franchising investing for free. Inside, you'll learn how to evaluate franchises, minimize risk, and maximize returns. This course is normally priced at $499. Don't let this pass you by. Go to edu.franchisewithbob.com/RG and get your free course today. So, a lot of the entrepreneurs, they go in and they have this idea, they go by and they don't realize, and it takes maybe a lot of their money for contracts and down payments, and they don't realize that they can offset that because it's capital contributions. And all of a sudden, it's like I've talked to people, it's like, yeah, I'm taking the salary. And I said, well, how much money did you put into it?
Yeah.
Do you not know that you can get that back? And they're like, no, I had no idea. I'm taking the salary. And I was like, why not pay yourself back? So some of
No,
the,
it's such a good point because that's such a misnomer in the business world that people don't realize that distributions are not taxed again. That as business owners, they think, oh, if I took 5,000 out, I'm going to pay an additional tax on that 5,000. And I think not to go back to COVID, this is also the biggest lesson of COVID for business owners is if you show 70, 80, 90,000 on the bottom line at the end of the year, the IRS assumes that you've taken that money. And I think that's where the nuances of tax planning for you, the owner, are so important that it just doesn't stop with that business because I had so many clients that
mhm,
during COVID were making 100 grand for 10 plus years and they never took any money out. They
yeah,
left it in the business. And then all of a sudden, well, the business doesn't have $1 million, right? It got spent, it got, just got lost. And all of a sudden you're like, well, you've paid taxes on that money. Like the IRS
mhm,
assumes you've taken it. So it's a really good exercise for the health of the business to say, if I show 100,000 on the bottom line, why am I not taking 100,000 out? Right. Like for me to go invest or go put other
mhm,
places. And if I'm not doing that, then I need to at least be aware that, like, in the future, I could take that 100,000 out and not pay additional tax.
right,
And like you said, one of the biggest things I see in returns, just from the tax side, is that balance sheet just becomes a plug, right? People are just like trying
mhm,
to get something in there. And so you really want to make sure whoever's preparing your return that you look at, like, what is my equity balance, my retained earnings in this business. So, and does it make sense? Like, is it what it should be? And if it's not, we can always correct it. But I mean, I've seen so many errors on that
mhm,
side from just people not talking about it and just assuming it's right, or how did they not know? And, let's just have that conversation. It's so
yeah.
important, before you sign off on the
It
return.
is. It is. So let's talk about your new book, The Real Estate Accelerator. What's it about? What's in it?
Yeah, so really it's about, educating people on the many benefits of real estate. So, as a CPA, I'm very lucky in that I get to see so many different people's lives because I'm doing their tax return, right? So I see the financial picture of people all over the map, right? Just starting out, retiring. And, what I've seen from doing this, almost 20 years is that my happiest retired people have real estate, that
Mhm,
that the market's great. And that's not to say that you shouldn't invest in the market, but the people who only have the market when they retire are very stressed, right? Because they
yeah.
can't control that. And so, downturn, 2007, COVID, whatever, like all of a sudden they're watching their nest egg go away. And there's nothing they can really do about that if it's in the wrong company.
Mhm,
Whereas the real estate people, up and down, that rent always
mhm,
appreciates, right? Like
mhm,
you're gonna get more tomorrow than you get today in rent. And once that property is paid off, you've created your own pension fund,
that's
basically,
right.
like, right. And so that's really what the goal of writing the book was, is so
Mhm,
many people, especially people who are W-2 earners or working for a bigger company, they don't really see the benefits of real estate because they just hear about markets and 401ks and all of that. So
yeah.
I really think that it's so important for people well before retirement to just see the benefits, because it's life changing for the people who are retired.
Well, because we really actually don't have to retire.
Right.
You know, I
No.
I own the hotels, I own single family homes, and why I have people running it.
Yeah,
I'm not working.
I
I'm not doing
know.
the 9 to 5. So and that is another benefit, ladies and gentlemen, is um, I, the real estate people that are in this, that you're talking about in the book, they've built a life they don't need a vacation from.
Right. Right.
You know, they don't have the grind. At the beginning, everyone does,
Yeah.
um, but it's nice having mailbox money. I mean, that's just,
It is. And they know that, like, if something happened, if, a life event, that again, it goes back to that equity piece that
Mhm.
you have this equity, that it's just sitting there. And obviously, you don't want to touch it. But if you had to touch it, you could. And it also is so much easier than, even the people who have stuff in the market. It's like, now you're going to create a tax event. Now I'm going to have, penalties. I had to take it out and it loses its value and all of
Yeah,
that. So, not that the market isn't great, but I think that, the biggest thing is that real estate allows you to be in control of your own destiny.
that's right. At least diversify, ladies and gentlemen.
Yes. Yes.
Um, so when, we've talked about saving money in taxes and uh, how good the real estate is. So what does it mean to be, in your book, it says the real estate accelerator. Is that where you're talking about is just kind of developing it, getting the money or getting the terms and then paying them off and holding them? What are you?
Yeah, I mean, I think to me, the difference between just being an investor and an accelerator is
Mhm.
looking at that future year, that 3 to 5 years out. That, a lot of real estate investors get, they get excited about the investment, they get excited about the daily cash flow. But, I think it's really important to build that sort of 5 year portfolio view to say, what will my net worth be in 5 years?
Mhm.
What do I want it to be in 5 years? And even beyond that, what does it look like as I pay these down? Does it make sense to accelerate paying them down? Really focused on that equity. And that I
Mhm.
think is the biggest difference between just being an investor and, what I call an accelerator is just someone who's like, you're really in the driver's seat and you're creating a net worth that's, exponentially larger than what you start with in 5 to 10 years just by understanding the game of real estate.
So let's talk about your company and, ladies and gentlemen, it's the Largo Group.
Yeah.
People go to Largo Group, they go to the website. What happens? Is there questionnaires? Is there education? What goes on?
Yeah, so we offer a lot of different things for different people. We do bookkeeping, tax for businesses, hospitality, and lots of other small businesses. And then on the tax side, we're really focused on strategy. So
Mhm.
our biggest thing is that we're a value add in everything that we do. So it's not just you're getting a return, but we give you, a projection for 25. We get you started. We offer the use of our tools, whether you work with us to do them or not. But our rent roll, our 5 year
Mhm.
plan, like we will give you access to all of that to do yourself because our ultimate goal is that we're with you for the long term and really providing that forward guidance. So like you said, you're never surprised. It's something that we
Mhm.
get to collaboratively every year. So that's really, kind of our driving goal is just educating our clients so that we can grow with them.
Is there a minimum revenue that you like to see before, for someone to be a client of yours? Is it a 5 to 50? Is it, or anyone just starting out?
No, I mean, what I've found is that, even our startups, I think the goal is that education. So we've had
Hmm.
people who start with us when they're just getting started so they can
Hmm.
learn and see the value of like, let me figure this out now so I don't make those mistakes.
Yeah.
And then, I think as they get bigger, then, we're also a resource to just take some things off your plate, like take the bookkeeping off your plate, some of the CFO work off your plate. So, but from the very beginning, our goal is that education piece. So a lot of people see the value, regardless of size, of just learning about your tax
Hmm.
picture, educating yourself on taxes so that you can make better decisions.
So before I would let you go, is there anything that you'd like to tell our audience that maybe I didn't hit upon? What did I miss? Anything?
So no, I think the biggest thing is changing that mindset. Whoever you use, right? Like obviously, I'd
Yeah.
love you to come over to our website, but whoever you use is changing the mindset of, you know, waiting for your accountant to tell you. I think that you're in the driver's seat, you're paying them for that service. So
Mhm.
if you have questions, don't be afraid to ask, right? Like
Yeah.
really before you sign off on that return, like if you don't understand the asset section or you want to see how it's depreciated, don't be afraid to ask because you are paying for that service and you want to make sure that you're comfortable. Because I mean, I can't tell you how many people I've had where they're
Mm-hmm.
like, I didn't even know that's what they put on the return. And it's like, it's okay to just have that 20-minute call to say, can you walk me through this return so I understand? And then just by doing that, I think it helps you to understand your tax picture and not avoid it.
Yeah. There you go. Well, yeah, I see those 40 some pages times
I
eight
know.
or 10. I'm like going, Might as well be Chinese,
I know.
and hopefully Anne's a good CPA because I have no idea what I'm looking at.
Right.
Um, how is, besides your website, how can people get a hold of you?
Yeah, so you feel free to send me an email, agannon@thelargogroup.com. You can also find us on social media, Instagram, Facebook. And we do, if you subscribe on our website, we do offer monthly webinars on different topics. And those are free to everybody.
Oh, perfect. Everybody, it's Anne Gannon at the Largo Group. Thank you so much for coming on the Richer Geek. Thanks.
Well, thank you so much.
And have a wonderful new year and 2025.
You too. Thank you so much.
Take care.